Okay, good
Not
morning,
here.
everyone. Thank you so much for joining us this morning for this session on the PPP Flexibility Act. We're thrilled to have you with us this morning, and we would like to thank Jillian Robbins from the Free Library of Philadelphia for hosting us, and in just a minute I will introduce her to you. And then I'll also introduce you to Cindy Burkle, who will be our presenter for today. We will be using the chat box for any questions, so please put your questions in the chat box. I'll be monitoring that. I will also be muting you manually so that we can cut down on background noise. So to get started, I would like to introduce you to Jillian Robbins from the Free Library of Philadelphia's Business Resource and Innovation Center.
Good morning, everyone. Thank you so much for being here. My name is Jillian Robbins, and I am the Business Services Supervisor in the BRIC, Business Resource and Innovation Center. I'm so happy to host this really important program this morning in partnership with the Catalyst Center and B. Bergeville & Co. It's a really important topic that I'm thrilled that I don't have to talk about, and we can have the professionals talk about. And I just wanted to give you a little information about the Business Resource and Innovation Center. We are a brand new space to the library. We've been doing the work since 2016, supporting business owners, nonprofit professionals, job seekers, and inventors. But we moved into a beautiful new space about a year ago, April 2019. So it's like a bit of a different world, but I can't wait to welcome you to our beautiful space in Parkway Central Library again, once it's safe for us all to be back. We offer free access to resources that are both online and in print. We have great programming. We offer about 8 to 10 programs a month for each of our service areas. We have guided research appointments that we're really excited to let you know are now available virtually. You can visit our website, freelibrary.org/BRIC, and click the tabs on the top of the page for each of our services, business, nonprofit, job seekers, and inventors, to access those resources, some sample documents, and of course the information on our free appointment services. They're about 40 minutes each. They're all done on Zoom, and you'll fill out a Google form where we'll get information on your business, what kind of resources you're looking for, and the kind of research that you're looking to accomplish. And we'll meet with you individually to help you get to those goals. And we'll share all those resources with you in the chat. We'll send you lots of great guides and fill you up with all kinds of great information to complete your business research. So without much further ado, I'm just going to turn it over back to Liz and get this party started. Thank you. Oh, Liz, you're muted.
Huh?
Thank you so much. We're thrilled to be here, and without further ado, I'm going to turn the presentation over to Cindy Burkle, who is a principal with B. Bergeville & Company.
Hi, thank you so much to the Free Library of Philadelphia and the Business Resource Center. We really appreciate you hosting this seminar and bringing people together. As you know, this has been an extremely confusing process. There's been a lot of changes. Nonetheless, we and our clients are incredibly grateful for this influx of funds to the business community. And we want to get the word out to provide as much clarity as we can based on what we know at the moment. About 2 weeks ago, there was a Flexibility Act that came out, and the big thing for that was it expanded the term from 8 weeks to 24 weeks. Last night, some more specific guidance came out, so we've updated the slides for some of that. But as you can see, things are changing rapidly. There are a number of you on this presentation that are not our clients. So we really want you to take this information back to your own accounting firm, run it by them. They could very well show you something different and say, well, no, our understanding is different. That's perfectly fine. In the end, your bank has the final call, and most banks that we've talked to have said to talk to your lawyers or your accountants. Things will continue to change. So some of what I share with you today could very well change in a few weeks. If you are not already on our newsletter list, please email Liz Vibber. She'll pop her email address up into the chat box and ask to be on our newsletter lists, that you can keep up to date with these things as they come out. Right now, our next session on this is July 2nd, and we anticipate some changes, hopefully some favorable changes that I can share with you later in this presentation. So our hope is that by July 2nd, some of this will be even more simple than it is now. And I apologize for even using the word simple, as you will see from our presentation is anything but simple. But the big takeaway is take all of this information, take it back to your own counsel. If your accountant isn't working on this, or they're working on other things and this isn't something that they're going to begin, by all means, you can engage us just for this piece. You don't have to switch to our firm. You can just engage us to handle this piece of the Paycheck Protection Program part. So let's go forward so we can find out what we're talking about. So you might remember that when you applied for the loan, the due date was June 30th. So all of the things that you were trying to measure, the money you were trying to spend, you were looking at an 8-week period to spend the money, and you were looking at June 30th as this date where you were trying to figure out your employee headcount. In a few slides, we'll discuss what we mean by headcount. But the big change that happened 2 weeks ago is no longer do you have 8 weeks, you actually have 24 weeks. So that is a big help. Looking at some of the businesses that are attending, there's some hair salons you haven't been able to open. Hopefully you'll be able to open next week, but you want to be paying your people to work for you. So this 24-week extension allows businesses like retail or beauty salons or gyms to actually pay their people when they're open so that their people can produce funds for them. The other change is that the payroll piece has to be at least 60%. So if you add up all that you're spending on payroll, we will define payroll shortly, and you look at your payroll costs, and then you look at your non-payroll costs. We'll dig into those in a little bit too. So your payroll costs have to be at least 60%, and your non-payroll costs cannot be more than 40%. Now that you have 24 weeks to spend the funds, it's pretty likely that you will be able to meet that 60% threshold. If for any reason you can't, this is the amount that is spent. So let's say you got to 55% of payroll. Your forgiveness would be reduced by whatever dollar amount that 5% represents. So if that 5% represented $5,000 and you received $60,000, then you would be forgiven for $55,000. The non-payroll costs that we talk about are utilities, rent, and mortgage interest. I'll dig deeper into that shortly. As I mentioned, you have 24 weeks. The counting date starts from the date the funds are deposited into your bank account. So you might have gotten notice from your bank that you were awarded the loan, but it could have taken 3 days to a week before it actually was deposited into your account. So that's the date you're counting from. And it looks at the funds spent. So when we talk about that 60-40, it's the funds that were spent, not 60% of what you received. Now that it's been extended to 24 weeks, it's likely that I would say that most of you on this call are much more likely to have all of the loan forgiven with this new 24-week extension. We're going to see a couple of things, especially when we talk about maintaining employee headcount, that could reduce your forgiveness, and we'll talk about that a little bit more. Originally, the term was a 2-year term, so let's say you get to the end of the forgiveness period, which right now is December 31st. You apply for forgiveness, you find out in April that $5,000 was not forgiven. That $5,000 will turn into a term loan that you would pay down over a monthly basis. And that can be either over 2 years or 5 years. So the 5-year payout is much more comfortable payout should there be some that's not forgiven. The interest rate is 1% per year. And it's important to know that if you got the funds deposited into your account, let's say they were deposited May 1st, that interest at 1% is accruing. So, 1% interest on $100,000 is going to be $1,000 over the course of a year. It is not yet clear if you can get that $1,000 forgiven, or if it's just going to end up being some sort of fee for using the money. So just keep that in the back of your mind. Guidance will come out. You will know sometime in the next few months whether or not what that 1% looks like. On all of these slides, you'll see links here to the documentation. So that way, if you're going back, you're going over this with your accounting firm or your legal counsel, you can dig into the original source and see where we are getting this information from. So what do we mean when we talk about payroll? It is the gross payroll, so that's your payroll before you take out taxes, and it's up to a maximum of $100,000 per person. So in this case, now that's over 24 weeks, it's going to be $46,154 if you have somebody that's making that much. You do have an option that you can say, I don't want to wait till the end of December. I want to seek out forgiveness sooner than that. So you can say, after 8 weeks, I'm going to go to the bank and seek out forgiveness. If that's the case, you're limited to $15,385. And those numbers are calculated by the full 100,000 divided by 52 weeks times either 24 weeks or in this case, 8 weeks. The number you can pay your employees bonus or hazard pay. You just want to make sure, let's say you have an operations manager that's been out on the floor of your plant doing a fabulous job, working 60 hours a week, and you want to give them a bonus. If they already are, if for some reason you're paying them like $105,000 a year, in their case, that bonus would not help you. You couldn't apply their bonus to this. But if you had somebody else that was making $40,000 a year, you could give them a bonus and you'll be fine. If you are a sole proprietor, so you're not incorporated, you would file an individual tax return. Part of your individual tax return is going to be a Schedule C. The Schedule C is where you're reporting your business income. If that is the case for you, if you're using the 24-week period, you are limited as the owner employee to $20,833 if you're using 24 weeks, or 2.5 months of your 2019 net profit, whatever is less. Basically, if you go back to when you applied for the loan, it was based on 2.5 months of your net profit if you were a Schedule C. So they're just saying, you paying yourself is limited to that much. The guidance that came out late yesterday mentioned that employer share of health insurance, employer share of pension, and employer share of, I'm not sure, the reading of it was rough with state unemployment, but that this part for owners, like owner's health insurance or owner's pension, would not be in this calculation. If you're reading that and thinking, oh my gosh, that wasn't the case before, and find that alarming, I wouldn't get too worried, because remember, now you have 24 weeks. So you're probably still going to be okay. But just be mindful of this when you're submitting your application. References are here, and then this is the information that came out. This information in the Federal Register came out late yesterday. It will be released on the SBA site on the 19th. So, in the world of accounting, this is as close as we ever get to breaking news. So this is like, you're getting it hot off the presses. You heard it here first. But because it is so new, I read it yesterday. This is the way I'm interpreting it. Here it is. Any questions on payroll before we go forward? Oh, this is a great question. Okay, this is my question too. So let's say after 12 weeks, you spent all your money. Can you apply for forgiveness? The way it's written right now, it's either 8 weeks or 24 weeks. There's not some kind of in-between period. So it does sound like right now you'd have to wait for the 24 weeks. Personally, I'm curious if they're going to change that, because I think it can only help the banks if they get these applications for forgiveness over a period of time, as opposed to a whole bunch at 8 weeks and then a whole ton after 24 weeks. But I don't know. But so right now, I would assume that your choice is only 8 weeks or 24 weeks, because that's the way it says right now. Will it change? Maybe, but right now. Yes, good question. So the question is, does the owner's salary need to match their salary from 2019? That is correct. You can't, you're limited. You can't pay yourself as an owner more than 2.5 times of what you made in 2019, this piece here. So on the Schedule C, if you don't have any employees, my understanding is with the Schedule C that your forgiveness is based more on your net profit as opposed to these actual expenses, because basically the net profit ends up to be what you're actually paying yourself. So that looks like that's what's going to happen there.
The next question, Cindy, is if the owner can get bonuses.
Okay. The owner can get bonuses, but remember you have these guardrails. So yes, the owner can get a bonus, but it can't be more than 2.5 months of this 2019 net profit. So that's something you need to be mindful of, or it can't be more than the 20,000. So if in 2.5 months, so just keep in mind those guardrails. Payroll measurement dates. This was much more of an issue when we're looking at 8 weeks, but they give you 2 options. It can either be the check date or the date that people actually worked. Since you have over 24 weeks, that whole thing about how you measure payroll, when you measure it, really should be a non-issue. It's really not going to be an issue. Pop a question in though if you have a question for that. So when we talk about non-payroll costs, what are we talking about? We're talking about mortgage interest on real or personal property. Personal property is something that is explicitly mentioned in the most recent guidance. So that clarifies some things because, you know, I tend to think of mortgage interest as interest that you have on a building. You know, you get a mortgage on a building. So this would extend it to things like copiers or equipment if you had a like a loan, like a copier loan or an equipment loan. It looks like that interest will be covered too. And rent on your building, or rent on a copier, rent on a postage meter, rent on, you know, if you're leasing a truck, if you're leasing some sort of shop equipment. So those things are covered now as well. So these expenses that we're talking about, these non-payroll costs, these are all things that are going to be under the 40%. And then the utilities listed here. If for some reason you're concerned about meeting the limits, you know, you want to, you know, fill up your oil tank, fill up your gas tank, you know, all that sort of thing, your propane tank. One thing to watch out for a number of our clients, the owner of the company will sometimes personally own the building and then rent it back to the company. In order to be able to include that rent, you need to make sure that you have that lease in writing. And of course, it needs to be in place before February 15th. So some of you have had your businesses for 20 or 30 years. And, you know, even if you have a separate landlord that's not related to you, that, you know, can you find the lease? Where is the lease? So make sure you have a copy of the lease. It's dated appropriately, it's signed, because that would be something that you would need to submit as part of your forgiveness. There's a good question about, does Philadelphia net profit tax count as a tax on wages? I do agree with you that it is a tax on wages, but it does not count towards forgiveness. When we look at the measurement date, if you click on this link to the guidance and go to page 12, they actually talk about, you know, your electric bill. So, you know, under the 8-week scenario, you would have 2 months of electric. But they actually give an example where you could pay like 1 month late and the next month early, and you could actually get 3 months in there. Their reasoning was that the dollar amount wouldn't be so large where it would really matter. Again, now that you have 24 months, and even if you weren't open, you had some sort of electric or, you know, some sort of oil payment or trash pickup or something, the whole measurement date is probably not going to be as much of an issue. If a sole proprietor works from home, you cannot count rent or utilities. That's my understanding. I would double check with your own accountant, but it really is just that net profit. You couldn't take that net profit and then add on your rent and utilities. So one of the things I said in the beginning is that you need to maintain headcount. And they talk about you need to maintain headcount to the end of the year. So if you're on the line and it's just you, you're good to go. You're not too worried about headcount because you know that you're going to be employed. But if you have employees, you want to be thinking about, can I maintain my headcount? So let's go back to, for example, a hair salon. You weren't able to operate. So chances are a number of our clients that weren't able to operate, they furloughed their employees. And they said, as soon as we can open up again, we'll bring you back. So there's that idea of headcount. So let's say you had 4 people, and then when you open up again, you bring back 3 people. Well, you wouldn't be able to maintain your headcount. However, you have until December 31st to make it right. So maybe you open up at the beginning of July with 3 people, and then right come the beginning of December, you bring back that 4th person, you'll be okay. The second piece is that you have to maintain the salaries and wages at least 75% of the level that you did for the first quarter of 2020. So if we got into April and you said to your employees, I'm sorry, I need to cut your pay by 10%, that's okay. But if you said I need to cut your pay by 26%, that would not be okay because you would not have maintained the salaries at that level. The reasons behind a lot of these boundaries are that Congress was trying to keep people employed as much as possible and give employers incentive to keep people employed as much as possible. So that's why we have these things. And this is where it starts to get to be a real nuisance to calculate, but it is something that you want to be mindful of, because if you don't, it will reduce your forgiveness. Just a reminder again, your spend needs to be at least 60%. 24 weeks, again, it should be okay, even if you don't open until July. Probably even if you brought half the people back, you would probably be able to spend the money in 16 weeks. It just depends on where your start date is. So remember, it starts from the time of your deposit. So if you were closed and you got the money, that 24-week period, you really want to be mindful when that date ends. It's not 24 weeks from when you reopen your business. So when we talk about headcount, what do we mean? And I do apologize. This is where it gets really convoluted and a bit sticky. If you use a payroll company like ADP or Paychex, they do have things to help you calculate this. So you can go there. If you want to engage us to help you with this, you could talk to your accountant. But these are the things that you need to do. So you have 2 options when we think about how we're going to figure out our head count. And they use the term full-time equivalents. I'm going to define that at the next slide. So the first thing that you're going to have an option about is your dates, your measurement dates. So you can compare this year compared to last year. So how many employees did we have February 15th, 2019 to December 31st, 2019? And we're going to compare that to February 15th, 2020 to December 31st, 2020 and see, how did we do? Maybe we kept 90% of our head count during that period of time. Or you're allowed to use how many employees you had from January 1st to February 15th and compare that from February 15th to the end of the year. You can use either one. So figure it out both ways, and whatever way gives you the highest number, that's the number you want to use. So that's the first piece. If it's payroll just for you only, you don't even need to worry about this. This is where you can sit back and drink your cup of coffee and be glad you don't have employees. So, because the head count is you, and you're going to keep yourself. So what do we mean by full-time equivalent? Well, once again, SBA has given us 2 methods. We can use either method, and we can pick which method is best for us, but we just have to be consistent that whatever period we're comparing, we use the same method for both periods. So they say that 40 or more hours is 1 FTE. So if you have somebody that worked 60 hours a week to make up for other employees that couldn't work, there's still one FTE. There's not 1.5. So unfortunately, one individual is just one FTE, no matter how much they worked. If anything is less than 40 hours, you can prorate it and do an exact mathematical calculation. So if somebody worked 10 hours a week, they're 0.25 FTEs. If they worked 30 hours a week, they're 0.75 FTEs. It's just number of hours divided by 40. You know, if you had somebody that worked 37.5 hours a week, you're going to divide it by 40 and get that number. That's one option. Your second option is that you could count all of them at just 0.5 FTE and be done with it. I would recommend, if this is something that could affect you, I would recommend that you look at both options and then decide what the best route is. I'm just checking to see if any questions are coming up. Okay, good. There's a question about the PPP loan and unemployment compensation. I'm going to save it for the end, and Liz will remind me if I forget. So, what if you furlough employees? Let's go back to our hair salon example. You open July 1st. I think under the current guidance, you can only be 50% full. I might be messing that up. Somebody can pop it in the chat box if I'm wrong. But if you can only be 50% full, you might not be able to rehire all of your people because you won't have enough work for them to do. So there is an exception, and it's down here. I just wanted to skip to it because as I know that as I'm talking, all of this is really frustrating if you haven't been able to run your business or if you're restricted by restrictions. And like you might really want to bring your people back, but if they can't produce income, you can't bring them back because you won't be able to pay them for the long run. So there is an exception that if there's safety requirements such as social distancing that prevent you from returning to the same level of business, that everything that we went through with the FTEs and comparing this period and that period and what does an FTE mean, you're exempt from it. You sign off that because of social distancing, I could not maintain the same level of business, and you're good to go. I really want to caution you that you want to make sure that you very clearly fit that exception. So we think about retail, if you're limited to the number of people that can come into your store, you know, your hair salon, your gyms, anything where from the outside you're limited to the number of people that you can bring in, then you will have a good leg to stand on about this exception. If what you do is primarily work from home and social distancing doesn't really affect you, but the fact that there was COVID means that you don't get as much business as you used to because people aren't spending as much money, that is not an exception. So just the fact that the virus is out there and the economy was shut down, if that's affecting your business, still it's that you do not meet that exception. The exception is specifically that you can't retain to the same level of business because of these safety type of requirements that you're putting in place.
So Cindy, we have someone who's a massage therapist, and if I'm not mistaken, that business is not allowed to reopen until we're in the green phase.
Okay. So, and you can pop in, Andrea, if you want, about, you know, are you able to open next week or do you have to even wait a little bit further? But yes, you would have the same type of situation. So if you need to wait, okay. So, you know, that is an issue that, okay. Oh yeah. Yes, because that's a lot of equipment and things to purchase. So the other exception is, and this applies to everybody, is that let's say people left for whatever reason, you had to lay off people. You're not trapped into keeping the same person. So if somebody's not performing well, you're not trapped to keeping them. You can let them go. However, you have to rehire a similarly qualified employee for these unfilled positions by December 31st. You've also, you know, if you reduce somebody's wages, you have to restore their wages by December 31st. If you try to rehire somebody, I know some of our clients have tried to rehire employees that they had to lay off, And for a variety of reasons, the employees have said, yeah, I can't come back. My kids aren't in school. I don't, childcares aren't open. I want to come back, but I can't. That you can follow these 5 steps. So your written offer to rehire, like an email will count. You're offering them to come back at the same salary, same wage, same hours. They say, I can't come back. Their rejection can either be verbal or in writing. I would encourage you to get it in an email just so it's clear between you and the employee. And then you have to maintain those records that say the offer was rejected. If you offered somebody to rehire and they couldn't come back, you want to reoffer like in October or November too, because things might have changed for them. You don't want to just reoffer to hire them now and like, oh no, I can't come back. You'd want to reoffer to hire them later. If for whatever reason you realize, oh my gosh, they can't come back till October, I need to hire somebody different, I can no longer keep this person, that's fine. But in that case, you're going to replace them with somebody else. SBA also says that you have to inform the state unemployment office that your offer was rejected within 30 days of the rejection. They're going to issue guidance about how you're going to do that. Practically speaking, though, in Pennsylvania, as the employer, you're going to get a letter from the state unemployment office every month saying, this person's on unemployment. Would you be willing to rehire them? And if you say yes, then you're going to show that you've let the unemployment office know that your offer was rejected. Your employee who says no, they can't come back, they need to realize that this could jeopardize their unemployment. And that's kind of the nature of the beast for unemployment. If you're on unemployment and your employer says come back and you say no, you can't continue to get unemployment. That's just the reality of that. If you have an employee who for like their performance isn't good and you don't want to rehire them, in Pennsylvania is an at-will state. I would certainly, if there's some weird situation there, please double check with legal counsel. But you are allowed to lay people off and not rehire them. You would just need to rehire somebody to take that spot. Just loan considerations. We would advise that if you got the loan, put it in a separate bank account from your operating account. Part of this is just practically speaking, money is tight at this time. So you want to make sure that you don't accidentally spend the money on something that's not permitted under forgiveness. So you really want to manage your cash flow carefully. And it's easier to do that if you put it in something like a savings account or a money market account, just something separate from your normal operating checking account. And then as you have the payroll and the allowable expenses, you can transfer money out of this other account into this account. This link is the old application, but there is a page on this application that talks about the types of documentation that the bank is going to want to see. So you can start assembling that documentation. You'll see what that involves. It's probably easier to save it as you go. And then you can also project out payroll. We have a tracking worksheet. Shoot us an email and we will get that tracking worksheet out to you. The application, like I said, will change. There's a simple one that's out now that just came out last night. The links are here. The simple form is here. The instructions are here. Basically, the simple form will relate to you if you don't have to worry about the whole full-time equivalent thing and reducing people's pay. So if you know right now, I'm going to have my same head count or I'm going to be good by December 31st and I haven't reduced anybody's pay, this easy application is for you. It's easier than the other one, so it's relatively easier. So that's something to keep in mind. Another situation is there's a provision in the CARES Act. This is separate from the PPP loan. So there's a provision in the CARES Act that you could defer paying the employer's share of payroll taxes. This is the employer's share of Social Security or FICA and Medicare. Earlier guidance had come out that said, well, if you get the PPP loan, after it's forgiven, you can no longer defer that payment. That has been cleared up. You can still defer the payment even after the loan is forgiven. However, please remember, if you've taken this option to defer the payment of payroll taxes to conserve cash now, you do have to, pay it sooner or later. This is not like a forgiveness. So let's say your employer share of payroll taxes is $25,000 and you started deferring that back in April. And it's $25,000 from April to December. You're going to pay back $12,500 at the end of 2021 and $12,500 at the end of 2022. So you want to be mindful that the day of reckoning is coming for that. Somebody had mentioned if you were only using the funds for payroll only, did you need to put the funds in a separate account? And I can understand that that's a good point. It's probably not as necessary. The only reason I would say to put the funds in a separate account is that if you put them all in your account, your operating account, you're still risking that you could use it sooner than your 8 weeks or your 24-week period. So you could use it kind of in advance. And so I would want to be really careful around that. You also want to be mindful if for some reason something's going to change. Forgiveness is not guaranteed. It's very likely, but it's not guaranteed. The interest thing is a common question that people are asking. So the question showing up in the chat box is, if the whole loan is forgiven and interest has been accruing, do you still owe the interest? So my earlier example, you got $100,000 after a year, that's $1,000 of interest that's accrued. You get the loan forgiven. Do you still have to write a check and pay the $1,000 to the bank? Or is that also forgiven because you met the things? And that is not clear yet. Right now, the loan is taxable. So you got $100,000. That $100,000, if that's all forgiven, that becomes income to you. The way it's phrased is kind of a technicality. It's phrased that the expenses that are incurred that relate to the forgiveness are not deductible. But in essence, it means that $100,000, if it's all forgiven, is going to be taxable to you. So you want to be mindful of that. Very interesting situation we have here, though, because if we're looking at, in some cases, December, you file your application with the bank for forgiveness. Maybe you file it in early January. It could take up 2 to 5 months before you know if it's forgiven. So you might not even find out about the forgiveness until the following year's tax period. But important thing to realize about this, Congress said that when they passed the legislation, their goal was that it would be forgiven. The IRS code, though, doesn't allow for that right now. And to change this specific part of the IRS code, Congress has to pass other legislation that will change the IRS code. There is a lot of bipartisan support to get this so that it would not be taxable. But just remember, right now, it's not. The employer payroll taxes, only this, the question is, are any of the employer payroll taxes to be included in the forgiveness? The only employer payroll tax that can be included in the forgiveness is the employer portion of state unemployment. And so that's a very tiny, tiny piece, but that's the only thing that can be there. Planning considerations. There's a lot of really good stuff on Twitter as far as there's some like tax professionals that go back and forth about all the ins and outs of this. So depending on your situation, there could be tax advantages that when you apply for forgiveness to keep the payroll closer to the 60%, it's pretty intricate. I'm not quite aware of it. So the big takeaway for our purposes today is that prior to filling out your forgiveness application, talk to your accountant. This is going to be a pretty specific situation, so don't be overly concerned about it, but I just wanted to have it in the back of your mind, especially if you got more money. Another question came through about the 40-hour week to determine FTEs and if they were salaried. If somebody was a full-time salary person, then that would be 1 FTE, even if they were on salary. So questions, like here you are, you can't open for 2 more weeks. What if for some reason you kept employees on, or maybe like you're not sure if maybe you won't open until August 1st based on what you need to do to get PPP. But perhaps you've kept employees on payroll because you had this loan. One of the things that you might want to think about is if your 24-week period works out, should you lay off employees like today and then rehire them later on? Because if they're going to get money on unemployment, there's more that goes into that question than just finances. Think about your employees and the different kind of the psychological impact of being on unemployment. However, right now, because of the extra $600 of federal unemployment, some of your employees possibly could make more on unemployment than they could on your payroll. So if you're not able to operate and produce income, it might be better for both of you if the employees were laid off. You can also have people work reduced hours. So I was talking with somebody and they did this whole elaborate worksheet. They're going to have their employees work 24 hours a week instead of the 40 between now and July 31st. July 31st is when that $600 extra piece is up. Their employees will be out, they'll get partial unemployment, but because of the extra $600, they will still make more working less hours, and they'll be able to conserve cash as a company. And because it's over the 24-week period, they know they'll be able to spend the money. If you're on this call and you haven't yet applied, there is still money left. So you can apply for the PPP loan funds.
And Cindy, can you just touch very quickly? Somebody asked a question about the EIDL loan versus the PPP.
Yeah, thank you for reminding me. So if you got an EIDL loan, that was something where you could get up to $10,000 and it turned out to be $1,000 per employee. So let's say you got 3,000 EIDL. You're going to work through the entire calculation, anything with FTEs, the whole 60-40. You're going to go through that whole calculation, come up with your forgiveness, and then you're going to take off the $3,000. Because what they basically said is that EIDL was, in a sense, an advance of the PPP loan, so they didn't want people to be able to get both forgiven. So whatever that end number comes out to be, you're going to take $3,000 off the bottom. And thank you, Liz. You reminded me somebody had a good question about, can you receive both? If you get unemployment, you know what? So I think that would be going back to the situation I just shared. So somebody's working part-time, 24 hours. So you're still working the 24 hours, but they're not working the other 2 days a week. So they can get partial unemployment. So because you can get partial unemployment, you can use the part that you're paying your employees to do work towards the PPP loan. And since it's 24 weeks, you'll probably have enough money to use up. And then the other part would be the unemployment part. I thought somebody else had a question about independent contractors. And you can't include independent contractors in this calculation. They are not eligible. If you have any independent contractors, you want to tell them to apply for the PPP loan themselves, and that is how they would get paid. That's how they would kind of participate in this process, but you can't use what you pay to your independent contractors. I do have a client who had, just for the short-term period, because there was a lot going on, they hired 2 people as independent contractors to do something specific for them for like 2 or 3 months. And once they realized that, they thought, I'm just going to put these people on payroll because it's a short-term circumstance. But if you have somebody that you've been regularly paying as an independent contractor, You don't want to go that route, because what would happen is once you put them on payroll, now you have to keep them on payroll. You can't really defend putting somebody on and off. Excuse me. So along those lines, the independent contractor does not count towards your FTEs. That's a good question. Thank you. I really appreciate your questions. Keep them coming. You might be thinking of a question and think, you know, does this even make sense? But ask the question, because this is so confusing. Chances are other people on this presentation have the same question you do. So,
Cindy, real quick, somebody asked that they've applied and received confirmation, but they've not received the funds yet.
Okay. I would contact your bank. There was a specific bank that will remain unnamed. If you want to privately check with Liz, she'll privately go back to you. There's a specific bank that it took our clients like 4 weeks to get the money. And at which time they were extremely apprehensive and wondering if they were going to get the money. But, and it's also somewhat of a comfort that for some reason, if the bank that you applied through told you were awarded the money, but you're still not sure, there is money left in the fund. If you had trouble finding a bank, we have a list of banks that are willing to lend to non-clients. One bank in particular has been extremely helpful to our clients. Just realize that when the bank, whatever bank you go to, if they're not your bank, they're going to ask you to set up an account with them that the money will go in, because they're lending you their money. So just recognize that. We've had clients that pretty much said, if my bank couldn't handle this and wasn't ready for me in this time of crisis, and some other bank can, that other bank is much more likely to have my ongoing business. I'm not telling you to change your bank. I'm just saying, just be aware they're going to want to have your own account.
One other question we have regarding the PPEs, equipment, protective equipment. Can that be included in the costs, the non-payroll costs?
No, that was people were talking about putting that in the legislation. So, but right now that's not. And yeah, essentially somebody had a comment about the EIDL loan. I mean, essentially it's like you're paying it back. They're saying if you got the EIDL loan, you can't get the max of PPP. It's going to be reduced by the EIDL. So all of this is in your head. You're like, oh my gosh, I'm going to have to spend hours making Excel spreadsheets. This is horrible. I'm really frustrated. I've already spent a ton of time on this. I'm already trying to get my business going. There is legislation in the works that has some pretty good support. And I personally think there's a good chance. It's not a rule yet, though, so don't get too excited. But several banking groups had said to Congress, we should pass something that would automatically forgive paycheck protection loans that are under $150,000. So if you're on this call and your loan was under $150,000, you would have a form where you would basically certify, I spent the money the way it was supposed to, I met my full-time equivalents, and on your word, they will forgive the $150,000. I really hope this goes through. The stats, I think this article was from like 3 weeks ago, and the stats at that time said that would represent 85% of the loans, but only 26% of the dollars. So when you think about it from like a risk standpoint, it would still mean that there'd be oversight over 74% of the actual dollars that went out into the market, but the banks aren't tied up with all the paperwork for so many loans. Plus, like if you got $100,000, it would really stink if you have to hire or pay your accountant or your lawyer $4,000 to help you get some of that money back. That's just really frustrating. The other thing, and again, this is a couple weeks old, but at that time, 60% of the loans were under $19,000, which is pretty good that it was getting out to, like, in the volume, it was getting out to, you know, what I would call the mom and pop shops, the people that were really hurt by this. There's another proposal that would be raised to $250. So my takeaway there is, and we're telling our clients the same thing, because our clients are like, could you help us with this? Can you work this up? We're like, we can answer questions here and there, but we don't really want to get in the weeds with you right now and charge you money if, if you borrowed $30,000 and they're going to come out with this, you don't want to pay a couple $100 to us to help you figure out something that could very well change prior to you having to apply for forgiveness. So if you're stressed out by this, you're worried what's going to happen, hold off. What? It would be worth getting consultation if you're trying to figure out, I have employees, should I keep them, should I lay them off? Think about the cash flow of your business and how you're going to run your business and how you're going to get your sales volume up and what employees will take to do that. That really should be an overriding factor first. So lead with that and then start thinking about, okay, based on this being my big thing that I want to do, I want to really maximize my revenues, get the right employees in place to get the best revenues I can. Once you've decided that plan, then think about forgiveness. What if you held on to an extra employee that cost you $30,000 a year, but in the end, if you had let them go, you would have only lost out on $7,000 of forgiveness. So there's some things like that to think about. If you're wrestling with some of that right now, that's worth talking to somebody, because that can save you money. So if the process of hiring somebody to get consultation with this can save you real money, you want to invest in that right now. If it won't, hold off a little bit if you're under this amount. And then here's my email with questions. We are 5 minutes from the top of the hour. I really cannot wait to give seminars face-to-face, but it will be, if I give seminars face-to-face again, I want a chat box because this is so helpful. I mean, it certainly is helpful when people can explain things in the audience and they can ask questions with their voices, but the chat box gives you a chance to formulate your questions and to write them down. But I do really miss the interaction with the audience. So hopefully one of these days we will all get to meet in person at the Brick. But thank you again to Gillian. If you have follow-up questions, you have our contact.
I do have one more, if you could just revisit this one more time, regarding the sole proprietor receiving both a PPP loan for the 1099 income and also unemployment for unemployment compensation. So for both the W-2 and the 1099 income.
I apologize because I think I might be misunderstanding the question. So it might have a little bit more details. So check with your accountant because they're going to know your situation more in depth than we will. But if you can't get a good answer, check with us. And if I'm just like being dense about it because it's been an hour, feel free to circle back to us. And if we can answer it quickly, we're glad to do that. Thank you, everybody.
Okay, thank you all very much.